Someone had told me you can tell how complicated somebody's life is by the amount of keys that they had. And when I was listening to the podcast, I looked down, there was like 1,000 keys on my passenger seat. And I said, you know what? I really do have a very complicated life.
Hey there, I am Dr. Jason Ballara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why? Hi everyone, I'm Jason Ballara, and this is the Know Your Why podcast. Today I'm here with Dr. Ryan Smolarz. He's the founder of Stores, leveraging his vast experience as an entrepreneur and otolaryngologist. I knew I was going to mess that up. Otolaryngology practitioner to guide people towards financial sovereignty. Let me just pause there before I mess up any more words and say thank you for coming on the show. I really appreciate you taking the time out.
Absolutely, and I appreciate you having me. This is going to be awesome.
Yeah, these are words I should know. Anyway, I would love to just start with, kind of letting you tell your story, tell your background, let the guests know a bit about you, and we'll talk about your journey into real estate, obviously, but just kind of give us your background so people understand where you're coming from.
Yeah, absolutely. So I grew up, my father was a surgeon. He was a bone doctor, orthopedic surgeon. And, my whole life, I just figured I would go to medical school and become a doctor, and that was it. And that was basically my whole life. Went to college with that intent, and then ended up going to medical school and in Galveston, Texas, and did residency. Ended up doing ear, nose, and throat. So I became a surgeon as well, just on a different part of the body. And we ended up coming down to the Virgin Islands to practice. We've been here 13 years. Somewhere along the way, I got 2 kids and a wife and a dog. And so, that was spectacular. So along that way, there was just sort of this itch that I couldn't scratch. And I really couldn't figure out what it was. And it was probably around 2017 or so. I'd been in practice for a few years, sort of got my feet under me, and kind of pushed the ear, nose, and throat practice up and about. And I just knew that there was something else that I needed to do with my life. And, I said to one of my friends, I said, you know what, I think I'm going to go to business school. And they looked at me real funny, and they thought I was kidding. And that was, I don't know, April of 17, something like that. July of 17, I was in the executive MBA program in Miami. And so I actually, turned over the leaf and did it, jumped in with both feet. And I got there and realized that I knew absolutely nothing about business whatsoever. And so it was a big transition for me. But along the way, I gained some knowledge and learned finance and studied hard and some of those sorts of things. And then September 7th, 2017, we had 2 Category 5 hurricanes that hit back to back and took us out for quite some time. We were out of electricity for 4 months. I was trying to gain my footing in business school, and that was very challenging while trying to salvage the practice in the house and all of those things, going back and forth to the States and, trying to do all that sort of thing. So those were definitely some rough couple of years. And then right after that, we got to jump into COVID. That was fun. We got sort of the triple whammy, as you may say. But over that course of time, it became very apparent to me that business aspect was what was missing from my life. And, I finally, about halfway through business school, I said, yeah, that was definitely something that was missing. And so ever since, we've been full force ahead doing the practice and running the businesses and that sort of thing. So when I got out of business school, I think a lot of people do this, is sort of get into all sorts of different asset classes, and you have all this knowledge, you got to use it, right? And so after a little while, I started figuring out, well, it's time to sort of center this sort of endeavor. And we haven't done that completely, which is great because it's still in several asset classes, but self-storage ended up being my biggest hedge, and the one that sort of I spend quite a bit of time on these days. And so it's, in my mind, the stable part of my life. When I was getting into it, interestingly enough, someone had told me you can tell how complicated somebody's life is by the amount of keys that they had. And when I was listening to the podcast, I looked down, there was like 1,000 keys on my passenger seat. And I said, you know what? I really do have a very complicated life. And so when I was trying to figure out what I wanted to do in business, I said, I was also like, for whatever reason, the next podcast was about self-storage. And I was like, it's a concrete slab in a metal box. I bet that's less complicated than some of the stuff that I would get into, right?
Yeah.
And so as one does, kind of go try to figure out who the best people in the world are to learn from. And that's what I did. And so I've been with it ever since. And not to say that I don't trade, and we own an assisted living home and do e-commerce and some of those sorts of things. But that was the hedge. When everything in the world goes sideways and people are downsizing and that sort of thing, we have self-storage. All of us say that we're in the death, destruction, and economic disaster business because it really is. So that industry tends to do much better than the others in times of turmoil, and that's what we really like about it.
Yeah, I think we'll dig in more on the self-storage thing too, but I just want to touch on a few things, kind of from your past and your story. The becoming, being set to be a doctor, following your dad's footsteps, that kind of thing, I think happens to a lot of people. They go through and just kind of do the steps. And I've talked, I'm a veterinary surgeon. I've had some other veterinarians on the show. I've had some doctors, MDs, different medical professional like paths. Tell us, just let people know kind of what schooling looked like for you, how long, the number of years you spent to kind of get where you got in the medical field. I just think it's important to set that perspective.
Yeah. So there was, all the elementary, middle school, and high school, however you want to quantify that. And then 4 years of college, 4 years of med school, and 6 years of residency. I didn't end up doing a fellowship, but a lot of people go on to do another 1-2 year track there. So it's not a short road by any stretch. And I'm quite certain that veterinary track is not either. So you got to really want it. It's got to be a passion, because, you run out of that, the drive to get up and, 3 a.m. to go deal with the sick people or dogs or cats or whatever that may be, can be quite challenging. And so, perfect podcast for, you have to have that why.
Yeah. Yeah. And the reason I just wanted to point that out is just the commitment that you made. In a lot of instances, that means people look at that as, okay, I put all these years in, all this time, I can't do anything else. And I had that same sort of feeling like, oh, I put all this time in, I did, as you said, undergrad, vet school, residency, like all of that stuff. And then it's hard to get past almost like a mental block of, well, this is what I have to do now because I spent all this time trying to get to this level. And I think for that reason, maybe a lot of people ignore some of those feelings that you had in terms of just that you wanted something else. You had another calling that was speaking to you that sent you to business school. And so I think I just like people to understand, like, it doesn't you're still a doctor. You're still practicing medicine, right?
Full time.
Yeah. And it doesn't preclude you from doing anything else, right? It's like, okay, I'm a doctor because
I love medicine. I love helping people or animals or whatever the case may be. But also, I like business, and I like looking at, getting into investing in assets that can help set me up for the future. So it's kind of like, I feel like a lot of people have that dream, especially in medicine, whatever kind of path, they have that dream from childhood. And, it's like one step after another, step after another. And then they get to the end and they're like, I can't dream anymore because I
Yeah.
hit my limit of, I reached that thing that I thought about from when I was a kid. And it's like, it doesn't have to stop there. And that's whether you want to be an active investor, a passive investor, you want to start a business, it doesn't matter. But the point is, I think, in a lot of instances, just people's kind of just shut off there, and nothing wrong with getting to that point, being a doctor, but it doesn't have to be all that you do if you have other interests.
I 100,000% agree with you. I sort of talk about this a lot, and the way that I talk about it is, you should never be embarrassed by what you want, because there's going to be whatever it is that you personally want. There's going to be people out there that tell you, you can't do that, or, I'm a pilot, for instance. Everybody told me, you're a doctor, you can't fly a plane. That's just garbage, right? I mean, I can do whatever I want. The reason why a lot of doctors die in airplanes is because they get home-itis and they, fly in terrible weather. Well, don't fly in terrible weather, right? Not that I have any less biases than anyone else, and I'm quite familiar with those. But when somebody tells me, hey, in that quiet voice, what do you think about this? I really want to do this. And I'm like, I don't care if you told me that you wanted to, go live out in the woods by yourself for 5 years. If it's what you want, it's what you want. You don't have to be embarrassed about that to me, right? Nor should you be embarrassed about that to anyone. And I truly, truly believe that this life's about chasing your dreams and being the best person that you can be. And if you're not doing what you love and what you want to do, you're never going to reach that potential. And so I am in total agreement with you.
Yeah. And I think people see, doctors, lawyers, sort of whatever, high achieving individuals that have reached that sort of point as, well, you've already reached as much success as there is, or whatever. Like, what? And it's even, I've had the same, sort of experience. People, like, the first like big real estate conference I went to, and I came back, was talking to a friend, and I was like, it was crazy to me and so inspiring to like be around these successful people. And his response was, well, you're successful. I'm like, yes, that's right. Thanks. I agree. But it doesn't have to end. And that's the thing, is like, it doesn't have to end there. You don't have to be successful only in one spot. And to me, a lot of success is just growth. And at some point, even in medicine, it's like, sure, there are advancements, but you're going to reach a point where what you're doing is no longer necessarily a growth phase for you within the medical world, because you've been doing it a long time, you do it well, that kind of thing. And it's just, I think, again, recognize it, as you said, it's like, I don't care what your dream is, but no reason you should be ashamed to follow that dream. It's just, you just don't have to stop. And so I think it's just, I like letting people kind of understand that mindset, that even within the medical world, you can be a doctor and do other things as well.
Yeah, absolutely. And I agree with you on the point of the conferences. There's this one conference that I go to in particular about funds. I think that I'm a person that strives high and doesn't really settle for second best, and like have really lofty goals. And every time I go and I think, man, I'm just not thinking big enough.
Yeah.
These guys, I personally, I don't think you could ever think big enough. But these guys are like, they're living it, right? it's just amazing to me, the mindset. And to me, if you, whatever you think about on a daily basis, and the things that you, so if you're positive or negative, if you're positive, the world's going to kind of move in that positive direction. It's the thoughts that you have. It's really weird to me how that works. But I think it's totally true. So if you have a goal of, like Elon Musk, getting to Mars, and you move everything in that direction, and all of your emphasis is put in that direction, then your chances of you meeting that lofty goal are infinitely more than if you don't believe that you can do it. I think a lot of it has to do with belief. If you're only going to be as good as what your goals are set out to be. So if your goal is to increase your revenue in your business by 5%, and you get 6 or 7, you're going to be happy with it, right? You think, I'm going to grow this into $1 billion business. Maybe it may not be there for a couple of years, but the chances of you getting there are infinitely higher than if you didn't believe that it was possible.
Yeah, exactly. Well, and that's it, just piggybacking on that, if you decide I'm going to grow my business into $1 billion business and you fail at 800 million, still pretty good. Like, it's
still pretty good, right?
Still pretty good. So it's like, if you, that's what I think a lot of times why people, like extremely successful people, have these huge goals, but they're okay with, they might not reach that goal, but being close to that goal is far ahead of what most people even allow themselves to think of. So it's just kind of expanding your mind's ability to accept some of that that really big thinking.
Absolutely, 100%.
So you mentioned you got your MBA despite despite some storms and things like that, and then you started maybe with a little bit of that shiny object syndrome. You mentioned doing kind of a lot of different things, and then found that self-storage was your main hedge. Why? What maybe walk through why people would lean in that direction, or why your experiences sent you in that direction?
Yeah, I think I don't know about the veterinary world, but the medical world, and I would assume it's fairly similar. With your training comes just a little bit of being risk averse. So with that stability aspect, that's not to say I don't do speculative investments. I do, certainly. I have sort of this small amount of percentage of my portfolio that I love to do that with. But real estate in general, especially on the commercial side, really leads to the fact where not only do you get the appreciation of the asset, but you also get to write off the depreciation of the asset as well. So you get a double whammy. So a lot of the losses that you can take on the taxes are going to increase your wealth without being on the front and you seeing it, but it's going to decrease your tax burden. And then as the asset appreciates, you sell it at the end, and then that gives you a big kicker on the backside. And so that's one of the things that really draws me into real estate in general, is that both sides of that coin. And I think that that's why a lot of people are able to gain, financial security by doing that. And I think it leads to a lot of financial stability, and with financial stability comes good financial health, or good mental health, and some of those sorts of things. Obviously, you have to work out and eat right, and keep yourself in good working order. But I think that a lot of people forget about that. If you're constantly trying to get food on the table and some of those sorts of things, your mind's not centered around solving the world's problems. It's just surviving, right? And so if you can build up to that, to me, that's where a lot of sort of that being able to fulfill yourself on that level comes, but you can't really do that if you're struggling to make ends meet. And so that's probably in its core the reason why I like real estate so much. Now I love the thrill of the markets and learning about how the Fed works and the interest rates and watching the stock market go up and down, the crypto markets go up and down. That's great. But there's a speculative side to a lot of that. And, at the end of the day, especially in the environment that we're in, I'm really happy being able to lay my head on the pillow at night and saying, you know what, tomorrow, if the manager of the self-storage facility doesn't show up, then you know what, we just answer the phone and take care of it ourselves. Right.
Yep.
So there's not any catastrophic things that are going to happen because of that. And so, it really depends on what allows you to sleep well at night and, take care of the things in your life that you have to take care of, where you're secure and where you're happy. That's a big part of all this, I think. I don't think, as far as I know, but that's that in its core is why.
Yeah, it's you mentioned kind of there's a lot of ways to be healthy or reduce stress in life and stuff, but financial stress I think is one of the biggest, if not the biggest, challenge that people face in whether it's mental health or even physical health, right? Like you said, if you're worried about putting food on the table, and I think a lot of times people say you're worried about putting food on the table, your mind automatically goes to someone who's poverty level, that kind of thing. But a lot of people that make good money, doctors included, they go through that whole like lifestyle creep thing, and then they get to a point where they actually still have to think about putting food on the table. And it's at a different level, but people do that, and they get to the point where they're living paycheck to paycheck, or they have to do X number of surgeries, or they get worried, that kind of thing. And it's like, what real estate does, what investing in general, and I of course agree with you, like real estate's probably the safest path, but what that does for you is it provides some level of sort of floor, as far as kind of what if we're both surgeons, like what if something happened to our hands, right? Like what if something happens to my hands? Like that's it, I'm done, I can't do it anymore, right? If like something, or like for me, like what if I get bit by some big dog and tears up one of my hands? I'm done for at least a while, if not forever, right? And so it's like, fortunately things like that, you try to take precautions, but like stuff happens, you get in a car accident and break your arms, whatever, things like that. And so real estate investing to me is a way to give yourself that floor, but it's a floor that grows over time. So it's like eventually that floor might might surpass your ceiling of earnings in even as a doctor or lawyer, some sort of high earning profession. So I think it's a thing that it starts out as maybe like a safety metric, but then over time can actually be, really your main source of income, and at a much more favorable tax rate as well.
Yeah, absolutely. And I mean, here's the reality of the situation, right? If you're investing in a stable asset, just the mere fact of taking that bulk of capital out of your bank account, I mean, there is one theory that you could just do that, take it out and put it somewhere where you can't touch it, right? And you're going to be better off, right? Even if it wasn't appreciating, even if you weren't getting the depreciation on the asset, just the mere fact that you can't get to it to buy the boat or the fancy car or whatever it is, there is some value in that. And although at this point in time you'd be losing on inflation, but that's a whole different topic. But there is something to that. And I think that a lot of it has to do with mindset, the mindset of a consumer versus the mindset of an investor. And if I had to pick one thing in business school that probably was the most valuable, it was understanding just that fact. I paid an exorbitant amount of money to learn that, but
ironically,
yeah. On about the second or third day, I was looking at the professor, and I could just tell my face was just completely white. And I was like, I have misunderstood this world my entire life. And I was thankful to be sitting in that chair.
Yeah. It is. I think I'm sure you're the same. Like that, I get really passionate then about talking to other veterinarians. I mean, anyone, but like specifically my colleagues in the veterinary space. It's like, guys, we've been doing this wrong. Like, there's no business, finance, even just like money smarts training in all of those years. All we talked about, sort of all that time you're spending to get to be a doctor, to get to be a specialist, whatever it is. I didn't take a single finance class. I didn't take a single business class. For high school, college, vet school, there's nothing as part of the residency. They didn't even let us talk to clients about money. Like it's so taboo to be, kind of to talk about money that it's people are afraid to, but it's like literally holding them back by just not talking about it and not understanding, kind of some of those basics that, like you just said, you went to business school to realize, hey, this is, I just need to look at this from a different lens, right? Don't look at it the lens from a consumer. And you just, people, you mentioned, taking the money and setting it aside and just not being able to touch it. But people use illiquidity as a negative when they refer to real estate. It's a positive. Yep. It's a good thing. Like, you won't do anything silly like, I remember that this years ago, Elon Musk sent a tweet and forget even what he said, but, Tesla dropped way down, and then like people sold Tesla because of a tweet he sent, or so, things like that happen. And it's like, don't you wish you had that Tesla stock now? Like, just, it's just kind of that, it doesn't make sense to be emotional when it comes to investing in whatever asset class it is, whether it's stocks, crypto, real estate. It doesn't matter. You don't want to react emotionally to something that's happening, and that's what illiquidity prevents you from doing, right? If you don't sell your real estate in a down market, you haven't lost any money. You just ride it back up again. It's just kind of, I think people lose sight of that. What markets do you like? Do you have any, sort of specific areas that you like to focus on, or kind of anywhere there's a good opportunity?
So my diversification sort of strategy in all asset classes, I like to diversify, but I don't like to diversify within an asset class. Sure. What I mean by that is, in the stock market, I may have 3 or 4 companies that I invest in, right? That's pretty much it. And the reason is because I know them. I know what the management's capable of, done a lot of research on them. And when, Jim, the CFO, goes on vacation and somebody doesn't get a report and the stock drops, right? I know why. And I think that education piece is gigantic in this world. If you don't understand it, there's no way that you're not going to be comfortable, right? And so, just like when you said, when Tesla drops 20%, you're going to get antsy, and there's a good chance you're going to sell for the wrong reasons, right? Now, if something changes in the story, and that's completely different. But in that scenario, you're not going to know if the story has changed or not, right? And that's a big reason why I don't like ETFs or index funds. I mean, I invest in them sometimes, but it makes me uncomfortable because I own a business that I don't even know its name, right? Because it's a part of a big package. So if I'm going to own a company, just like in the outside world, I want to know what's going on. I want to look at the P&Ls. I want to look, at who's running the show. I want to, have they been successful in the past? If not, that's okay. But why? Was it something unethical? Was it something just that they needed to learn and now that's skyrocket? There's all sorts of different scenarios, but I think that that's cores to the understanding piece.
Yeah. And that's a big defining difference between investing in stocks versus like investing in real estate private placement. Because if you have a fund, your investors can call you and say, hey, why didn't we get a distribution this month? What, they can ask you those questions that you're talking about, but you can't do that you can't even do that if you're buying individual stocks. You may understand that company, but like Apple stock is a great stock, but Tim Cook's never getting on the phone with me. That's not going to be a thing where we get, if it drops down, he's not going to be like, oh, well, this has happened, but we've got it under control. It's, kind of, we'll be back up in the next 6 months, whatever it is. Like you don't get to have those conversations. And as you said, like an ETF and a mutual fund is even another step removed, and you're paying someone fees on that mutual fund to have no better performance than you. It's not performance-based fees. It's like they have no better performance than you could do on your own. Whereas the fees that come along with most real estate investments, syndication or funds, there are fees, and then there are some level of performance-based returns in most instances. And it's like I think people just, as you said, it's an education thing because people maybe just don't understand that difference. And I think it's an important difference. Like I invest in our deals, but I invest in other people's deals. And I love the fact that I can text them and be like, hey, I just got your newsletter. I have a question, and, write back to me. And it's kind of just a nice way to be able to feel more comfortable, because bad things are going to happen. We had a downturn in the market. Bad things are going to happen. It's going to happen. It's going to go back up. It's going to come back down again sometime in the future. Like things are going to go wrong. But I love what you said is it's like, okay, well, let's explain it. Like, let's understand why and what steps can we do to rectify that. And then we're good. Like it's just got to keep working. Like it's just you just have to keep working and moving forward.
Everybody rowing in the same direction is gigantic. And I think you hit on this, but I'll kind of piggyback as well. The alternative assets, when you're running a fund, I think about it as a team, right? So in the markets, I feel like I'm sort of out there kind of swimming in the middle of the ocean, trying to figure out the things by myself. And I'm up against BlackRock, Citadel, the biggest financial firms in the world. Are they going to have better information than me? Absolutely. Right. Now there are ways to mediate some of that, is just basically go along with them. But to me, in an alternative asset or in a fund, you are piggybacking on the people who are the experts in that field. So you have a fighting chance of knowing the information because they're going to the conferences, right? They probably have somebody on the team who's looking at the macro. There's probably somebody on the team that's looking every day at the P&Ls, the CFO type of person. And so to be able to do that on your own is just almost impossible without that team behind you. And not only that, but it's like the perfect education opportunity. You go to college and you're paying hand over fist for somebody to teach it to you. Where this, you pay the capital to an investment, you get more back at the end. And, you get the newsletters, you have access to all the financials. When there's a question, just like you said, there's a person behind that text, right? Yeah. And you say, hey, look, I saw that, 10 people moved out of the facility this month. What happened? Oh, there was, whatever the case may be. There was a facility across town that opened up. There were a few people that lived over there and just decided to travel to us. And now it's time for them to move back over. And, oh, by the way, there's a new development that's opening up next week behind us, right? So we're going to fill that up, and we're actually going to be able to increase rates from that. Outstanding. That's awesome. Okay. I'm going to lay my head on the pillow and I'm going to sleep like a baby. All right. And so I think there is a lot of comfort and a lot of security, just like you say, that comes with that. And if you look at the numbers of the new funds or the new hedge funds, new private equity funds, usually they perform better. And the reason is because they're going after the C class facilities in whatever category asset class they're doing. And so there's more, we call it meat on the bone, right? And they're also hustling, right? They're starting out and they're going a million miles an hour to get the deal done. Not that the bigger funds aren't good to invest in either, but it's just different, right? The returns may be a little kind of blunted a little bit. But some people say, you know what, I want the gray-haired guy. And some people say, hey, just like surgery, right? It's finding your surgeon. Some people want the new guy straight out of residency that's been in university setting for a long time. Some people want the gray-haired guy that's, can barely stand at the table. It's just a matter of preference.
That is a real thing for people listening. That is a real thing. No, I couldn't agree more. I think it's, and you mentioned like the large, BlackRock, so like their return goals, their focus, like they're okay with 4, 5, 6% return. That's a win to them because they've got $1 trillion invest. It's like 5% of $1 trillion is a lot of money still. Whereas like if you're, I always be interested to get your take on this too. Like it depends on what phase you are in your investing career. But to me, the thing I care about maybe the most in terms of metrics is equity multiple. I think that I want to know that it's growing over time because at this stage in my life, I still do surgery. I can make money that way. So I don't put a lot of stock on cash flow specifically. I think it's great, it's nice, but like unless you're already investing millions of dollars, like if you're a new investor and you're investing, $50,000 and it's your first deal, that's awesome. But even if you're getting 10% a year on that, that's $5,000. Like you're probably just going to spend it. Because it's going to be split up over, quarterly or monthly. You're probably just going to spend it rather than what you want to be doing with that is kind of reinvesting all of those returns until you get to a point where that, 8, 10, 12% annual is significant enough that now it starts to replace income and things like that. And, in the beginning, I don't care. Like cash flow is almost meaningless until I have millions of dollars to invest. And I get it. Like the people that are putting millions of dollars, or, people that are cutting checks for $10 million, they want cash flow because that's what they're living at now. They're professional investors, but the retail investors and like folks like me, I just want to use my time now as a growth phase and just keep like I'm just jamming as much as I can in to grow that equity invested so that my 5-year doubling cycle, whatever is kind of in process. And so I'd be interested your take on that, kind of if I'm sure I know some people like very, very focused on cash flow, and that's great. You have to know what your investment thesis is, but that's just kind of been my take.
Yeah, absolutely. So, and I think you're speaking to the compounding of the returns that you have. And so as it comes out, if you're able to put it back in a tax-free sort of vehicle, then you're winning almost certainly. So I think it's really looking at the business, the type of business that you're investing in, right? If you're getting those distributions, then you are getting taxed on those distributions. And so when you look at it, right? So if a company does one really good thing really well, and when they first start out, they are not giving distributions because all of the money is going back in, right? And so you're not paying taxes on that, but it's sort of compounding on your on the money that you put in, because in the end, you should end up with a higher multiple than what you would have if they didn't reinvest that money. Now, if the business does one thing really well, and then they get to a point where they can't do that, they have really two choices. One, they do something else, or two, they start giving distributions because there's too much cash to sit on. And at that point, I mentioned it before, the story has changed a little bit in that company, right? So you have to decide as an investor, do you think that this company is good enough to be able to do two things well? And if so, are they going to use that capital that they're putting back into the company in the most efficient way? Or are you, as an investor, good enough to find another company that can, right? And there's nothing wrong with getting those distributions. I love to get those checks in the mail just like everybody else does. But the question is now I'm paying tax on that distribution that's cutting into some of the capital that I'm actually going to either use to put food on the table or reinvest, like you say. And so I think those are some really core questions about, I would consider that part of your due diligence as a limited partner or a general partner if you're an owner of the company, but usually a limited partner in our case for this particular conversation. So I think that is a big question that each investor should ask themselves and answer, but most people don't.
Yeah. I think 100% you need to know there's nothing wrong with cash flow. Believe me, I'm not sad to get cash flow, but I'm saying it is lower on my, it's what people talk about. And I think I've heard someone call it a safety metric before, which I think is really a great sort of term for it. It's like makes you feel good. It makes you feel like things are going well. But like, it's funny because, we say that, but then like people doing development deals right off the bat, like you're not getting anything for 2 years. It's just not happening because all that money is going into building whatever this is, apartment building, office, whatever that it's self-storage, like development deals, you don't get any money. And sometimes then they just sell it. And so you get no money for the life of the hold, but your returns come when it's sold. And that's great. And some people like that because they're getting tax benefits until it sells, and then they get their money. And so it's just really, really understanding where you're at in your investment journey, and therefore what deals am I looking for? And I think, maybe 5, 8, 10 years ago, you could say I'm going to get cash flow and a big bump at the end. I think that's maybe not, just at least in the current environment, it's probably not the case. Like you can still get cash flow, but you're probably not going to get a big equity bump at the end of the deal, versus in a lot of instances, you're going to have most of your return is going to be at exit. So it's just understanding what you want. And I love what you said is finding those operating partners to work with that can accomplish what that is for you. And for people who are listening, considering being a limited partner, they should tell you if they can't. Like they should tell you, like, that's not if someone comes to me and they're like, I want to do a development deal. I want that, 2.5, 3 year turnaround. I don't care if I get anything in the meantime. I want all the tax benefits. Well, guess what? I don't have that right now. Like that's not my, kind of area of expertise, but I know this person, and this person. Let me introduce you. Like those are things that are definitely available. So it's just, I think, I always tell people, like, I think everybody should invest in real estate. I think everybody should invest. Real estate should be a part of it. If it's not with me, okay. Like that, sure. Still you should do it. Like that's, but don't just not do it because you're like, oh, I don't love what you're doing, or whatever the case may be. It's you don't have only one option. So I think it just all really great points in terms of, what really understanding what you're trying to accomplish out of it. Like if you in the beginning are using investing because you want to actually make more money, you have to already have a pretty good chunk of money to invest to have that be something that's going to like impact your life. If again, depending on the deal, uh, there's like the ATM funds are basically all cash flow, but then at the end of it, there's nothing. When the
Yeah.
fund ends, that's it. You're done. There's no equity, and so it's not necessarily a bad thing, but it's not going to grow your wealth over time. It's just going to give you cash flow while you're in it.
Yeah, your EBITDA maybe 2 or 3 multiple, because there's no commercial real estate working off a cap. So, I agree with you. Total cash flow play. And there again, nothing wrong with that for especially someone who's going into retirement,
Yeah.
who's losing part of their salary, if not all of it, and to have that monthly check to keep food on the table. Awesome. It's a perfect play. But an 18-year-old that's got 40 years in the markets, it depends on what their investment strategy is and what they're comfortable with. But for me, it wouldn't be the place to be.
Right. Yeah. It's nice to see those checks show up every month, whatever, when you're getting or every quarter, or whatever, when you're getting distributions. But it's not. It's definitely not my end goal. My end goal is to have X number of dollars invested so that's continuing that doubling cycle well beyond when I'm gone. Teach my kids, listen, this is what you need to do. Just keep this rolling. Still get a job. I'm not. You're not.
Right.
It's just kind of. This is what you do to kind of have as your backstop, which again that floor keeps rising over time. So it's a nice safety net to have. I don't want to keep you all day long. I know it's later for you than it is for me. It's Friday afternoon. I appreciate your time. I just want to get to ask you the questions I ask every guest.
Yeah.
First one is related to the name of the show. I like to ask everybody, what is your why? We talked about you're already a success. You're a successful doctor. Now you're also successful in business and real estate. But what kind of keeps you going? What's driving you at this point?
Yeah. I mean, part of it is I haven't even gotten started yet, so I don't feel like I'm successful. But the why I get up every morning and do the things that I do is certainly because of my family, my daughter, my son, my wife, my dog, my extended family, mom and dad as well. I mean, they taught me everything I know. So, try to carry on that sort of tradition and that work hard mentality. And people say, Ryan, nothing's ever enough for you. Okay. Right. It goes back to what you want. I'm never, ever going to be embarrassed about what I want. And it's getting up every day and trying to strive and be the best version of myself that I can be. Yeah. And I think that's probably on, 30,000 foot view, my why, but, getting up every day and looking at my kids and, making sure they have good education, good, availability to healthcare. One of the things that I always talk about, people say, why do you need so much money? And I stop them. I'm like, it's not about the money. It's not about Ferraris. It's not about Rolexes. What keeps me up at night if I don't sleep well is if one of my family members got some sort of catastrophic problem and there was one person in the world, say, in Australia that knew how to fix the problem and I couldn't get them there. If I needed it, I hand them a blank check and I say, do whatever it takes to get Asher to that person. Right. Yep. To me, that's what security, financial security anyway, means.
Yeah. Yeah. It's access and opportunities. That's what it is. It's access and opportunities. And it's like, you mentioned the Ferraris. I don't want fancy cars because that's taking away from those access and opportunities in a time I might need it. I don't care about any of that stuff. Like I want exactly like you said, like if there's an issue, like my kids are not going to have less than adequate care because we can't afford it. Like that's just never, that's not an option to me. And so it's that, and it's like, and then, okay, by extension, people, isn't enough is enough. How much is too much money? I'm like, well, okay, how many people can you help then?
Yeah.
Like what if you can practice medicine for free because you've raised, you've made all this money in investments? Like what if straight up just giving it to charity? Who cares? Like there's no shortage of ways that it could be used for good. And it's just that, again, just shifting that mindset around to like, it doesn't, I'm not trying to have a stack of money under my bed, like, or under my mattress.
Right.
It's not putting it in socks. Like I'm trying
Yeah.
to build a future for my family and beyond, right? Like whatever good we can do. So it's really a great point. And I guess goes back to that, thinking bigger and bigger is that was that conference that I mentioned to you. Why it struck me so much, these successful people, is because what they lectured about was their charities and their ways of having impact at this point. They had already done it all. They made their millions. And like, now they were just like, oh, I just spend all my time trying to help people. Like,
Yeah.
like they've got companies, like everything else is getting taken care of for them. And they're just like, I'm just making an impact. And it's like, that'll be a pretty cool place to be in life. Like that.
Yeah.
Just get to
They're
that point.
building a legacy, right?
Right. It's
Not only financial for their family, but for the world as a whole. And yeah, I mean, I personally, I think that I can, if I did assimilate that much wealth, I think personally I could distribute that wealth in a lot better than maybe a big corporation that has millions of dollars in expenses and some of those sorts of things.
Yeah.
And do good with it. I mean, that's maybe
Yeah,
I'm a marker there.
that's a great point too, because most of us that are in real estate and our real estate companies, they're pretty lean. They're not like a Facebook or a Amazon, or where there's like, don't even know, tens of thousands of people working for them. It's like a lot of these companies are a small team of 5, 10, 20 people. Well, again, it's like, okay, you make sure yourself, your family, your employees, everybody's taken care of, but then you do have the ability to distribute that, in a impactful way without worrying about like, oh, we have to keep, what Apple has like billions of dollars in cash, right? Like they have that in large part probably because if something goes wrong, they don't want to run into a problem. And when you have a company that big, you do have to put that aside. And it's just kind of like,
Sure.
you can certainly want to keep reserves no matter what size company you are. But the point is like, you're not going to have like this catastrophic failure of tens of thousands of people losing their job, things like that, just because of a cash flow issue in these circumstances. Next question, a little more lighthearted. Tell us something about yourself that isn't common knowledge, special skill, a hobby. You did mention that you're a pilot, so if you want to expand on that, or if there's something else, you seem to be a man of many talents.
Yeah, so we can talk about the pilot thing. Coming out of residency, one of my life dreams was to learn how to surf. And so my thought process was that if I became a pilot, I could throw a board and the kids and the wife and go wherever we wanted to go to surf. And that was really the impetus behind that. And it worked out for the most part. I don't fly as much right now just because I'm so busy with these other endeavors. But I think that it kind of goes back to that mindset of, you know what, I'm not ever going to let someone tell me I can't chase my dreams. And if it's flying a plane, then that's what I'm going to do. If they tell me I can't fly a plane because I'm a doctor, I'm going to, tell them to go pound sand. It's just the way that it is. I do something that people may not know about me. I in the cryptocurrency markets every day. Part of the speculative portion of my financial life that, I'm accustomed to seeing 40% drops there. So I think it's actually helpful in some of the other asset classes and some of the other ways of investing, because you're so used to it, right? The volatility.
Yeah.
I actually love volatility.
Yeah. As long as you don't react to it, it's totally fine.
Yeah. Right.
No, that's cool. When people hear this and they want to reach out to you, what's the best way?
Yeah. So our website is storepartners.com. That's our firm. That's our private equity self-storage firm. There's a link on there. You can click it. You can have a meeting with me and my team. If you're looking to be a limited partner, we're always looking. So that's probably the best place to find me. Store Partners is on Facebook, Instagram, Twitter, all the socials. It's pretty easy to find me these days. I'm pretty much all over the place. So any one of those, you can send us a message. But if you want a meeting to talk about whatever investment related issues or things you want to talk about, please click the link and let's have a chat.
Yeah, we'll put all that in the show notes so people can find you. Final question for you, Ryan. What piece of advice would you give to someone who they hear this, they want to get started in real estate? What would you tell them is, kind of good first steps to take?
Yeah, I would, and I say this a lot, I would say get pitched as absolutely much as possible. Get in the room and just start. You're going to know, right? You get it on a call with us, and first 5 minutes, you're going to say, you know what, I connect with these guys, it resonates with me or not. And that's okay. Find where you're comfortable, because you're going to be the one that puts your head in the pillow at night and have to sleep with that decision. But at the same time, there are thousands, tens of thousands of fund managers out there. Their whole job at the capital raise side is to teach people about their investment. And I would say use that resource. Just get in the room, get started. Even if you go buy one share of the SBY, you got skin in the game. You're going to start learning it, whether you like it or not, because you got money on the line. And it doesn't have to be a large amount of money, but just start investing. You and I both know so well that going room to room and, seeing the one dog or the one person, with boogers, is, no matter how much each one of those pays, is not going to get you to financial freedom. Without making money while you sleep, the more money you make in your salary, the more your expenses goes up. I think it's a law of nature. I haven't figured it out for sure yet, but I'm pretty sure that it is.
Yeah.
So
one expense definitely goes up the more money you make. Your taxes. So
right,
your biggest
absolutely.
expense for sure goes up the more money you make.
Yeah. So I would say just start learning, start talking to people, go to the conferences if you can. But, there's so many resources out there on the internet that are totally free. YouTube's filled with them. Just start learning about it and change that mindset.
Mm-hmm. Yeah, I couldn't agree with that more. I think that's fantastic advice. Well, listen, thank you so much. I really appreciate you coming on the show, everything you've shared. I think people are going to get a ton out of this episode, especially I think other medical professionals. I just think it's a little bit of a different perspective, but in reality, everyone should be thinking about investing, how to improve their financial future. It's not going to fix things tomorrow. You're really looking at a 5, 10, 20 year time horizon here, but it's worth putting that effort in. So thank you so much for coming on and taking the time out. I really do appreciate it.
Absolutely. And hopefully one day we'll have you on the Medicine and Money show.
Yeah, that'd be great. And folks listening, I know you're going to get a ton of value out of this episode. Please like, rate, and review. And you can find Ryan. We'll have everything in the show notes. Thank you all for listening today.
Hey there, I am Dr. Jason Ballara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?